Welcome. Thanks for joining my interview. And today I'm here with joined with Suyan Ge. She's a senior mortgage broker, and today I'm fortunate enough to have her on the show. And we're gonna talk about a little bit about some basic knowledge about mortgage, as well as some insights about the industry. So welcome.
Oh, thank you. Thanks, Barton, giving me this opportunity. Okay, let's
Yeah.
start.
Yeah, why don't you tell me something about your company?
Okay, my company is called Citywide Brokerage Services, which is in 1995. There were three co-founders set up this company. I joined this company in 2006, so which is like 14 years ago. And at that time, back to 2006, we only had 10 brokers in this firm. But today we have 30 brokers in this firm.
Oh, wow.
Yeah,
That's
so this year is our company 25th anniversary. Yeah, long time. Yeah, company
wow.
history. Yeah.
So in order to grow like a company to that size, you must have like went through a lot of ups and downs, right? What are what are some experience, like some good memories and some like challenging moments that you know?
Yes. So I am really lucky joined this company. This company had a really good reputation in mortgage broker industry. So all of those lenders like to work with us. So we get access to every lenders in this market very easy because of the reputation. And for the charter time, yeah, because the market is up and down, and also the lending policy changes time by time. So we did have a lot of challenge. Since, for example, 2008, when the financial crisis happened, the market go crash. So of course, the mortgage broker business impact badly too. But we went through this. We still survived. So all the brokers works out pretty good.
Mm. Yeah, I can imagine the real estate market back in 2008 must have like been hampered really badly, right? So all those like credit issues and made it really hard for people
Yeah,
to get back into like home ownership, right? So
right.
I'm glad that you guys actually went through that period.
Yes.
So yeah, so fast forward to today. It's been almost 20 years. What can you tell us? Like, is there a major client base that you serve, or you just like in general, it doesn't really matter who you have business with?
So my client basis um, is most of my clients are Chinese because the reason is back to 15, 17 years ago, there were not many broker who can speak Chinese, both Mandarin and Cantonese. So I was pretty lucky jump in this business. So I established my clients base through so many years. But my client normally referred by realtors, network, uh, network resources, and also client referral client. So that's how I built up my client.
I
And
see.
also my client, not only like a residential mortgage needs, and also I have a lot of client has a commercial property loan and mortgage need. So I have a both, yeah, from both
Oh,
sides. Yeah.
I see. So, so you To become a mortgage broker, you don't have to like pick a side whether to go into residential or commercial, right? You have the freedom to do both of them. Is that what the rules
Not,
are?
ne- not necessary. There's some brokers,
Oh,
they
okay.
only focus on residential mortgage, and some
Mhm.
brokers only focus on residential. Currently, like me, I start from residential mortgage and then move to commercial mortgage. I still do both now, but my assistant now take over my residential client a lot,
I
so I
see.
can have more time focus on commercial applications, because commercial
Mhm.
is more difficult and more complicated.
Okay. Oh, so just to the listener who don't know what's the biggest difference are, residential mortgage are just like normal mortgage for our homes and apartments, right? And
Correct.
commercials mortgage are like shops on the streets, maybe space in the shopping mall. Is that count too?
Right. So
Okay.
commercial mortgage, including uh, building, the whole building, office building, strip mall, industrial. Yeah.
I see, I see. Okay. So I assume like they have like a different rates too, right? So
Right. It's
yeah, okay. Yeah.
different criteria. Yeah.
Mm-hmm. So maybe we can dive a little bit deeper into like to talk about what exactly is a mortgage. Because from my understanding, mortgage has a lot of components in it, right? Can you
Right.
tell us what do we need to pay attention to when we talk about mortgage?
Okay. Mortgage basically is a loan from a bank or lender, not necessarily bank or some other lender,
Mhm.
use the property as a security, borrow money.
Okay.
So once the money borrowed, the client or the borrower has to pay interest, over interest and principal monthly based on the calculation. And by the end of the term or by the end of the day, client can pay off the whole principal. Depends on different situations. One is sold the property, one is the client, the borrower has enough money, pay off the whole principal. And once the mortgage paid off, so the home is freed to the borrower. Otherwise, it's secured by the bank or the lender.
I see, I see.
Yeah,
So 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 from that we can tell a mortgage has a lot of like different variations of mortgages, right? Oh, like someone would like to pay more principal, someone like to have a longer term.
right.
And is that why we need a mortgage broker? Is that how they can help us in finding the right mortgage?
Okay, so mortgage. So that's okay. How do I explain this? Explain this. Mortgage broker. First of all, in BC, we have to pass exam or take a course and then pass exam through UBC's Southern College. And after that, we have to fund a mortgage firm to register our license. And also we have to register our licenses through FICOM. Right now it's called BC Financial Security Authority. So once the broker has this license, then we have the access to different multiple banks and lenders. So that's why we can help a client to apply through different bank or lenders. Depends on client's information and client's income documents, and also client's net worth statement situations.
Mm,
This is different from one borrower, one client went to their own bank to apply a mortgage, because when they went to a certain bank to apply the mortgage, so that bank only can provide the that bank's policy, that mortgage product to this client. So the client has limited choice. If the client situation, income or net worth situation is pretty complicated, so the client may lose their mortgage application. They may cannot successfully get their mortgage. When they come to our broker, because we have so many choices, we can do so many different products for the client, we may probably get a client a good mortgage as client need.
Mm-hmm. I see. It's like a tailor fit service over there you have at your brokerage, right?
Right.
Yeah, that's wonderful. That's wonderful.
Yeah.
I will probably put the link to the our solder website down below after our show notes, just for everyone to see what the steps are to become a broker, maybe if you're interested. So yeah, thank you for explanation. Why don't we move on a little bit, since we're talking about like qualifying for a mortgage, right? What um is is the credit score really that important? We heard a lot about credit score.
Yeah.
Yeah, can you tell us like what's a good score, what's a bad score, and
Okay.
like our student, we're spending money on lattes and stuff. Do those affect our score right now?
Not really. Good score is anything above 680, so that's good. 680, so that's good scores. 650 is like okay credit score, beacon score. If the beacon score is less than 600, there will be problem.
I see.
Yeah, but for some special program, special mortgage program, special mortgage product, the lender may need 720 beacon score. Yeah, even the borrower has credit score like 680 or 670s. Sounds like pretty good, but when you look into the report, there may some problems we have to pay attention. So that's back to your question. If we buy lattes, we use my credit card, that's effect. They may not, they may. So what do we look at? The report, if there's no R2, R3, which is delayed or missed payment for 2 months, 3 months, if there's no this delinquency, those problems, or M2, M3, so that's fine. That's fine. But for some pretty credit report, even the credit score is 680. There's some problem, like R2, R3 means the borrower didn't pay even the minimum payment for 1 or 2 months.
Oh.
As long as the borrower paid the minimum payment on their credit cards every month, they won't affect their credit bureau. Okay. So the credit scores. And another thing will affect the credit bureau is don't use up to 75% of the credit card's limit.
Okay.
So once you above the 75%, that will affect the beacon score. The consumer's thinking probably this person having cash flow problem, so they used up their limit. I see. Yeah.
Okay, that's a good tip for everyone. So try to keep track on your
no delinquency. No delinquency. So as long as they pay their minimum payment, so that's fine.
Okay. I see.
So in Canada, there's 2 major company collect those report. So one is Equifax, one is TransUnion.
Okay.
For Equifax, everybody can get a one-time free check every year, so no cost. So they can go to Equifax.ca to apply to get one copy of their credit report.
Okay.
Yeah.
So if you only have a report once you have a credit card, right?
Right.
Okay. Yeah. So those who still don't have a credit card, you might not be able to find anything on your file yet. But it's good to know that you can go check at these two places. Yeah.
Right.
Okay. Yeah. Good. So with that credit score, when you talk about like don't spend too much to the limit, right?
Right.
Does it matter if you earn a lot and you spend 75%, or you earn a little bit but you still spend 75%?
Doesn't matter.
Doesn't matter.
Doesn't matter
Okay.
because from your credit report, they don't know how much you make.
I see.
This is not related to the income.
Mm-hmm. Okay, interesting. So it's like the one thing I want to touch on is the debt to income ratio, right?
Mm-hmm.
I can see that it's kind of related to credit score too, right?
Right.
And yeah, do lenders look at that too?
Yeah, heavily.
Heavily.
They do. So for credit bureau, like a 680, so they use debt service 3944, so which is use more their income portion to service the debt, so they can get a little bit more loan amount instead of if people has a less credit bureau like 600, probably they only can do 3240 debt ratio, so they will get less loan amount.
I see.
So the credit bureau is important. And another thing credit bureau is important is if there's a bad delinquency on the credit bureau, even they have a 650 credit bureau, the lender may decline the mortgage application.
Okay, so there's still a lot of like variables that could affect your eligibility, right?
Right.
Mm-hmm.
Lender do look at the bureau number and also the content, see what's in there, in their report, if there's anything really serious.
Okay. Just step back just a little bit. Maybe we can explain a little bit more about what is debt to income ratio. So can you tell us what exactly is debt to income ratio?
Okay. It is the borrower's income, the annual income, 39% of that, use that to qualify to calculate how much this borrower can borrow, so can afford. Normally is use the qualified rate, the mortgage qualified rate. So right now the qualification rate is a 4.89. So use that, either 25 years amortization or 30 years amortization, and to calculate how much they can afford it. And also including property tax, if there's strata fees, and we use half of the strata fees and utility to calculate how much this person can borrow. Okay, GDS, normally we talk about like a GDS 44%, 42%, 40%, which that it is. It is the mortgage P&T and utility, and also the other debts including student loans and car loans payment, and compare with the income. So that one cannot be exceed 44%.
Okay, understood. Yeah.
For some really, really strong case, lender may consider give a exception to use up to 50% of their income. That's really case by case.
Okay.
Yeah.
Okay, I see. Okay. Thank you. Let's move on. So, you have helped investors, right? So a lot of like some listeners or some club members of ours are aspire to become an investor, right? And is there like what's the relationship like when working in investors? Do they have a different requirements, or do they usually look for, do they qualify for better deals, or what's with the investor
Oh,
thing?
it's freezing again.
Oh,
Yeah.
sorry. I can repeat the question, sorry. Can you hear me?
Can you repeat that again? It was
Yeah. So a lot of like some of our club members are aspire to become real estate investors.
right.
And yeah, can you tell us about like what it's like for for a mortgage broker to work with real estate investors? Do they like do they usually qualify for better loans because of their experience or the size of their portfolio? Does that affect how they apply for a mortgage?
Okay. This is a very complicated
Yeah.
to help people as an investor. So I understand you're saying investor is people buying a property to rent it, correct?
Yeah, yeah.
Okay. So for young people, most of the case I seen is they live with parents or live with a relative like grandparents, and they buy a property, say like a condo, and rent it out.
Mhm.
That's the most situation I see. So for that kind of case, we use the applicant, the borrower's income plus the rental income to qualify how much they can borrow. But for this kind of case, the down payment minimum is 20%.
Okay, I see.
They cannot do like a 5% down payment or 10%. This is
Mhm.
this is the requirement from CMGC or Genworth or uh, Canada Guarantee. Those are three insurers.
Okay. So
But
yeah.
but but we do have to calculate. Depends on different lenders. Probably somewhere 500 to 600, like a shelter cost for those person who live with their parents.
Mhm. Okay. So it's like if really depends on how much rental income that you can bring in too, as well as your maybe your day job income and certain rules that apply
Right.
right now. So yeah,
Right.
it's hard to tell you what exactly you have to do and what can we do. So maybe if you're looking for advice, you can go reach out to Suya and talk about if you have money to own a house right now, go ahead and give her a call.
It's a really,
And
yeah, really case by case, and
mm,
also different lenders use a different portion of the rental as an income.
oh
So that
yeah,
that make a big difference.
I see. I
Yeah,
wow, that's interesting. Uh,
yeah.
okay.
That's one of the reasons. So borrower better to go ask for broker to go through their mortgage application instead of just go to their own bank, because there's only one
Mm.
policy for
Ah,
that's just
interesting.
that bank, right? They won't. If
Okay.
you go to RBC, RBC won't tell you CIBC's policy, right?
Yeah, because they want you become their customer, right?
Right. They only tell
Mhm.
you how much you can borrow from RBC. They won't tell you probably you can borrow more from CIBC, right?
Mm.
Yeah.
So it's you brought up a really interesting fact here, like we tend to just most people just wired to go to their banks for mortgage because they think they have been using, my mom and dad has been using
Correct. Yeah.
RBC for 20 years, and you have a student account, and then you just kind of kept it for forever, and now you thought that there's only one way to get a mortgage. However, that is probably not true. There are a lot of alternatives out there that can get you even a better deal, right?
Correct.
Yeah. Yeah. So thank you. That is really good information. Just a tiny little bit of tip for everyone here. My next question here is like down payment. And down payment is like the biggest hurdle that we all have right now as as citizens in Vancouver, right? And the CMHC, I heard news that they're trying to increase the minimum down payment required for our normal people from 5% to 10%, I believe.
Okay,
Is
no,
no?
no. This
What's
week,
the situation here right now?
okay, this week they announced a new policy, but they didn't change anything about the down payment. But I mean, the percentage, they didn't change that. What they changed for down payment, that will hammer a lot of young borrowers is the down payment cannot be gifted from their parents anymore. That's CMHC. That's on the other side. The good news is Danvers and Canada Guarantee, they announced they're not going to follow CMHC, so they're not going to change their policy in near future. So for those people who apply mortgage, we can go through Danvers and Canada Guarantee, but not CMHC. So they still can use the old policy. So don't worry.
Okay. That's gonna be quite shocking, right? Because if you can't get help from your parents, does that mean that less people will buy a house?
For young people
Yeah,
too.
for young people,
For
right?
young people, that will be hard,
And
especially for Vancouver's housing. It's so
yeah.
expensive. Yeah. Yeah.
I don't want to be like too getting too political here, but I feel like it's making it harder and harder for young people to get a mortgage.
True. True. In my career history, I saw the down payment from back to 17, 16 years ago, from a zero down to 5%, at least 5% down payment. Amortization from a 40 years amortization now to 25 years amortization insured. I mean, for non-insured conventional mortgage, 30 years. So that's make a lot of people out of the market, kick lots of people out of the market to buy property because of a down payment, because of the qualification.
Hmm.
Yeah.
Okay,
So
so
true, the policy getting tighter and tighter year by year.
mm,
I haven't seen the policy goes back to the old days, and I don't see that will happen pretty soon. So the policy, I don't think they will lose the policy
I
soon.
see.
So yeah.
That's
And
yeah, the government has been working to kind of restrict how freely we can buy a house. And is that like making it harder for you to do business too?
of course, of course.
Yeah, unfortunately.
Unfortunately, the policy is getting um, more tighter, but the Vancouver housing price is still going up. It's not going back very much, only except those are high-end properties. But the high-end properties is not for people who earn money locally, who can afford it, right? Like
Yeah.
4 million, 5 million up, those properties. Yeah, that's not for people use their income to qualify their mortgage. But for the affordable housing, yes, we do see the policy is getting harder.
Mm.
Yeah.
So yeah, with the show is coming to an end, where can we like look up to the rules about like what you've talked about, so we can like look up to there? Is there the CMHC website that you usually go to, or is there a special source that you refer to?
Um, okay, you can go to CMGC website. It's open to public, and Genworth's website. Most of their policy, and also the high ratio high ratio premium amount percentage is all up there, so you can check it up.
Okay.
Yeah.
So I will put that down in the show notes. And I don't know if we mentioned what CMHC is, right? So it's actually Canada Mortgage and Housing Corporation.
Right.
It's
It's funded by government.
yeah.
It's government company. The other two company I mentioned, Genworth and Canada Guarantee, they are not government backed, not government company. They're like a private company.
Yeah, they're like the big boss in the mortgage industry.
Right.
And they kind of set the rules and
yeah
control how
yeah
we buy houses.
Yeah, because CMGC is an is an insurance company. Any people who borrow money buy CMGC's policy, bought CMGC's insurance. If the mortgage go default, so CMGC will pay the whole balance to the bank. So that's why they really, yeah.
Okay. Yeah. Thank you. Thank you very much. I think that's almost time. How can people get in touch with you if they have more questions?
Oh, that they can email me as the email address you already have.
Yeah.
Or you can give me a call at my cell number 604-771-1398.
Okay. Thank you very much. So
Thank
please send her questions or anything that you have or any concerns about our today's interview. So thank you very much, and I'll see you guys next time.
Yeah, sure. Thank you. If
Thank you.
you or your friends has any questions, just send me email.
Okay. Thank you.
Thanks.
Have a nice day. Bye-bye.
You too. Bye.